We're going to continue on with chapter 4 with posting the general ledger and then preparing a trial balance. And this learning objective I'll probably break up into 2 or more videos, but we'll see how it goes. Let me move. Okay, so what is the general ledger? And it's the set of accounts that's used by the business. And what it is, and not to be confused with the chart of accounts. So the chart of accounts is basically our list of accounts. The general ledger is the collection of all of the transactions for those various accounts. And that may not make sense at the moment. As I'm hearing it, it doesn't make sense to myself, but I know what I mean. So you will hopefully understand this in a second. And when we post to the general ledger, we're taking our entries from the general journal, which we did in the last video, and we're then copying those into each ledger account. So here we have the journal entry that we did in the last video of the initial opening entry for the our Maxon Capital account here. It was a $2,000 initial investment, so we debited our cash for $2,000 to show the increase and credited our capital, otherwise known as owner's equity. And so now we're going to take this journal posting and we're going to now post to the general ledger. So here is the in the general ledger we have cash and the account number that's for cash. And remember back in the last video we looked at assets are numbered starting in the 100 series. But anyway, so we've got the account name at the top, and then what we're going to do is carry the date over from the journal and then show this was a debit transaction for cash. And all we're worried about right now is, and so now we're going to then look at, again, this last column or set of columns here, which is the balance. So the transaction itself was $2,000, leaving us with a balance in our cash account of $2,000. So the last column here will keep the running total. So you'll just have the individual transaction amounts on these first lines, columns here, and then you will add or subtract as the case may be. And then you're going to indicate what journal entry this, or where in the journal this appears. So J for journal, 1 for page 1. And now you're going to go back to your general journal, and PR is posting reference, and you're going to indicate account number 101 is where this entry has now been posted. And you don't want to put the number in here because wouldn't it be easy just while you're doing the general journal, say, hey, heck, I know that this is the cash account, so I'm going to stick it in here. You only want to do this after you've posted it to the ledger, because this is your way, or frankly anyone else's way, of coming in, looking at your journal and knowing that in fact this was posted to the cash account. Now, why is that important? Well, don't we want to know how much cash we have? I want to know how much cash I have. If we just continue to record transaction after transaction in here, we have no way of knowing how much cash we have without going through every transaction and adding them all up. So the ledger is the way that within each of these individual accounts, we can actually see what the running total is and the transaction amounts that comprise that running total. So after everything is posted, we need to prepare a trial balance. And we can do this daily, weekly, monthly. And what this is the trial balance is going to prove to us that our debits and our credits balance. And if we are not in balance at this stage, we've had some sort of an error, and we'll talk at the end of this chapter about the kinds of errors that you can see and maybe how to identify which error has been committed. Okay, all right. So now we've got Rohan's trial balance. All we've done is we've started out, we've listed all of our asset accounts that we had entries in for this particular period and the account numbers for those. And then their balances, which are debit balances. Then we list our liabilities second, and we've just had 1800, which was from the prior video. And then we go to our owner's equity. We've got capital and drawing, and then we go to our expenses. I'm sorry, revenue and then expenses. So you see our revenue is a credit balance. Our expenses, which will offset that, will be debit balances. And so when we add the column of the debits and we add the column of the credits, they equal. And that means we are in balance. If they don't equal, we've made a mistake somewhere along the line. Now, the trial balance is something that you want to do before you begin the process to do your financial statements. You can also certainly do it again daily, weekly, whatever, just to check to make sure that you don't get too far into your accounting cycle being out of balance and not knowing it. But certainly it's something that if you are out of balance, you don't want to go to the next step of preparing financial statements, because then your financial statements are going to be wrong. And this is probably a good place for us to stop and go on to the next video.